to all our viewers. This is India Tonight and I'm Shrishti Sharma. And firstly, on to our big story. We are tracking the sell-off in the global equities market. Now, the sell-off on the Wall Street continues, where benchmark indices on the Wall Street are heading for another volatile week. The combination of high rates and a potential recession as inflation surges has kept investors on edge. The Dow Jones is trading over 450 points lower, and even the benchmark 10-year Treasury note yields hits its highest level since late 2018 and is now trading at 3.185%. Back home in India, the benchmark indices extend their losses for the second session in the row, and it was not just the equity markets, even the currency market and commodities markets cracked too. Now, talking of Indian rupee, that has hit an all-time low at 77.5 and closed just shy of that mark. While talking of Brent crude, that is also feeling the pinch, down about 2.7% as of now. Now, talking of digital assets like cryptocurrencies, they were at the receiving end too, and in fact Bitcoin, that's the largest crypto token, has dropped below that $33,400 mark, and all in all, it's an all asset sell-off that we are witnessing. But now let's understand this pressure on the global markets, and now we are being joined by our guest Peter Cardillo of Spartan Capital. Peter, thank you so much for joining us today at ET Now. Firstly, that's the meltdown that we are having across the globe. That's the deep red of sea. In such kind of a time, my first question to you is on the debate over the growth versus value stocks. I'm talking specifically of equities now. At this particular point, what should be your pick? You are preferring growth stocks at a cheaper valuation, or at this point, you would like to go with the value ones?
I really can't comment on that, but I can tell you this, that the market is, obviously Nasdaq is in a bear market and the S&P is following. And so we're at critical levels today with the S&P at close to 4,000. If we breach that on the downside, then obviously we could see further selling. There is a fear factor in the market, and that fear factor is inflation, which is tied to the Fed. And unfortunately, the Fed seems to have lost credibility. Just last week, we heard from Chairman Powell that he ruled out hikes of 75 basis points. And another Fed member today suggested the same thing, but yet we see rates continue to move higher. And that's because of the fact that, the inflation rate is much higher than interest rates. And so there is an imbalance, and that imbalance needs to be corrected. And that's why we're seeing what we're seeing in the market. But to get back to your question, I think people that have not sold, it should stay the course, but they should be in stocks that are giving them some sort of a return, dividend stocks.
Okay, absolutely get your point, Peter, that there is a kind of a fear in the markets. But now, at this point of time, when everything is falling, where should one park their money? That's the big question. You suggest them to sit on cash, or you still find some pockets where they can actually go and invest that to have some kind of a return expectation?
Well, we're in a bear market in the bond market, no question about that. And it might get a little bit worse before it gets better. So maybe bonds is the way to go. Inflation is not going to stay high forever. In fact, I think that inflation may have peaked. And so it's just a question of seeing inflation come down a bit. Of course, there's the wild card, and that wild card is energy prices. We could very well see oil prices go to 125, and that would, give another boost to inflation. But I think it's safe to say that perhaps we've seen a peak in wages, and certainly once the supply chain begins to loosen up, you're going to have a flood of products on the market, and that should take overall inflation down. So if I'm correct about that, then one should probably look at the bond market now. It's been a disaster for the past 5 to 6 months.
Yes, absolutely. And we see new highs touching in that particular market as well. But Peter, if we see 2022, that seems to be a surprising year because across the asset classes, no one was expecting oil to touch above $100. We see new levels out there. And it's been a while now that the oil is sustaining above that $100 per barrel mark. You talk of bond markets, new highs over there. And the recent one making into the headlines is the dollar index. That is actually going up. The dollar is strengthening. What's your take on the emerging markets on that? Because we at India are feeling some kind of a burn because of a continuous FII selling. Do you feel that there's more pain for the emerging markets in the times ahead?
In terms of the dollar, yes, I think there is. I think the dollar is going to continue to move higher. In fact, if you look at the dollar indexes trading slightly above 104 this morning, I think we can get as high as 106 over the next coming month or so. And the reason for that is, look, interest rates are going up here, and we have a war. So factoring in those two basic fundamentals for the dollar, it certainly makes sense to put your money into a safe place. So, I mean, will eventually the dollar come down? Absolutely. But for now, it's a safe haven. It's replaced gold and to a certain degree, probably even the Bitcoin. So I definitely think that the dollar has room to go, and we've not seen the end of the rise.
Okay, but Peter, you just touched upon the gold and the cryptocurrency market as well. Just would like to end the interview having your take on what's next for both of them, because gold is seen to be as a safe haven. You feel that people will go further and would like to park their money at then because the inflation is high, and this is a kind of a situation when we are not seeing people actually investing in an asset class like gold. But on the other hand, the cryptos are feeling that sell-off. What's your take on both of them?
Well, I'm a believer in gold, and I believe everyone should have a certain amount parked in gold, even though sometimes it doesn't act the way you want it to act, especially over the past 2 or 3 weeks. Certainly, it's not acting on the fear of higher inflation or of high inflation. I think, obviously, the reason for that is you have yields making new highs, and you have a dollar that's very strong. So those are two negative factors for gold. But does that mean that gold could go down to maybe 1,500? I don't think so. Worst case scenario, we go down a little bit more, but hang around these levels. As far as the Bitcoin is concerned, I really don't follow that market very much. And to be quite frank with you, I'm not a believer of the Bitcoin. And so another reason why we're seeing gold going down is because people are selling gold and trying to raise cash. And also they're doing that with the Bitcoin. So right now we're in a market that is unpredictable. We're in a market that is gripped with fear. And we're in a market that is discounting a lot of negativity, and perhaps a market that's already built in a light recession sometime in the beginning of 2023.
Yeah. Yes. Thank you so much, Peter, for joining us today at ET Now and helping with your take on markets and across the asset classes. Pleasure speaking with you.
My pleasure.